Welcome to GRE. I'm your host, Keith Weinhold. What's the real backstory on why we have this thing called the dollar, why it keeps getting debased, what you can do about it, and when the dollar will die? It's a lesson in monetary history, and our distinguished guest is a familiar voice that you haven't heard in a while. Today on Get Rich Education. Mid-South homebuyers, they're total pros. With over 2 decades as the nation's highest-rated turnkey provider, their empathetic property managers use your ROI as their North Star, so it's no wonder that smart investors just keep lining up to get their completely renovated income properties like it's the newest iPhone. They're headquartered in Memphis and have globally attractive cash flows, an A-plus rating with the Better Business Bureau, and now over 5,000 houses renovated. There's zero markup on maintenance, let that sink in, and they average a 98.9% occupancy rate, while their average renter stays more than 3.5 years. Every home they offer has brand new components, a bumper-to-bumper 1-year warranty, new 30-year roofs, and, wait for it, a high-quality renter. Remember that part? And in an astounding price range, $100 to $180K. I've personally toured their office and their properties in person in Memphis. Get to know Mid-South. Enjoy cash flow from day one. Start yourself right now at midsouthhomebuyers.com. That's midsouthhomebuyers.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from St. John's, Newfoundland to St. Augustine, Florida, and across 188 nations worldwide. I'm Keith Weinhold, and you are inside Get Rich Education. It's 2025. The real estate market is changing. We'll get into that in future weeks. Today, over the past 100 years plus, we've gone from sound money to monopoly money, and we're talking about America's currency collapse. What comes next? And how it affects you as both an investor and a citizen. I'd like to welcome in a longtime friend of the show and someone that I've personally learned from over the years because he's a brilliant teacher. Real estate investors probably haven't heard his voice as much lately because until last year, he had been the co-host of the terrific Real Estate Guys radio show for nearly 20 years. Before we're done today, you'll learn more about what he's doing now as he runs the Main Street Capitalist platform and is also founder of the Raising Capitalists Foundation. Hey, it's been a few years. Welcome back to GRE, Russell Gray.
Yeah, it's fun. I actually think it's been maybe 10 years when I think about it. I remember I was at a little resort in Mexico recording with you, I think in the gym. It was just audio back then, no video.
Yeah, I remember we were trying to get the audio right then. I think you've been here more recently than 10 years ago, but yeah, now there's this video component. I actually have to sit up straight and comb my hair. It's ridiculous. Well, Russ, you're also a buff of monetary history. And before we discuss that, talk about the state of the real estate market today, just briefly from your vantage point.
I think the big story, and I'm probably not telling anybody anything they don't know, but the interest rate hike cycle that we went through this last round was quite a bit more substantial, I think, than a lot of people really appreciated, and I started talking about that many years ago because when you hit the zero bound and you have 6, 7, 8 years of interest rates below half a point, the change when they started that interest rate cycle from 0.25, 25 basis points all the way up to 5.25, that's a 20x move. And people might say, well, I go back to what Paul Volcker did way back in the day when he took interest rates from 8 or 9 to 18. That was only a little bit more than double. Double is a far cry from 20x. So we've never seen anything like that. Part of the fallout of that, as you know, is a lot of people wisely, and I was on the front end of cheerleading this, is go get those loans refinanced and lock in that cheap money for as long as possible because a loan will actually become an asset. The problem is when you do that, you're kind of married to that property now. It's not quite as bad as being upside down in a property and you can't get out of it, but it's really hard to walk away from a 2 or 3% loan in a 6-7% market because you really can't take your same payment and end up getting more house. And so that equity is kind of a little bit trapped, and that creates some opportunities. But I think that's been the big story. And then kind of the byproduct of the story, the second tier of the story, was the impact it had on development, because it made it a lot harder for developers to develop because their cost of funds and everything in that supply chain, food chain, you marry that to the 2020 COVID supply chain lockdown and that disruption, which, you don't shut an economy down and just flick a switch and have it come back on. And so there's all of that. And then the third thing is just this tremendous uncertainty everybody has because we just went from one extreme to another. And I think people, they don't want to rock the boat. They're going to kind of stay status quo for a little bit, whether they're businesses, whether they're homeowners, whether they're anybody out there that's thinking about moving. I mean, unless life forces you to do it, you're going to try to stay status quo until things calm down. And I don't know how close we are to things calming down.
One word I use is normalized. Both the 30-year fixed rate mortgage and the Fed funds rate are pretty close to their long-term historic average. It just doesn't feel that way because it was that rate of increase in 2022 that caught a lot of people off guard, like you touched on. Well, Russ, now that we've talked about the present day, let's go back in time, and then we'll slowly bring things up to the present day. The dollar is troubled. It's worth perhaps 3% of what it was 100 years ago, but it's still around since it was established in the Coinage Act of 1792, and it's still the world reserve currency. In fact, only 3 currencies have survived longer than the dollar: the British pound, the Japanese yen, and the Swiss franc. So talk to us about this really relentless debasement of the dollar over time, including the creation of the Fed and the Bretton Woods Agreement and all that.
That's a big story, as you know, and I always like to try to break it down a little bit. One of my specialties, I'd like to believe, is I speak macro and I speak Main Street. And so when I try to break macroeconomics down, I start out with, why do I even care? I mean, if I'm a Main Street investor, why do I even care? In 2008, as you know, was a wipeout for me. Why? Because I didn't think anything had happened in the macro. I didn't think Wall Street, a bond market, I didn't think that affected me. Only thing I really cared about was interest rates, and I had a cursory interest in the bond market. We just try to figure out where interest rates were going. But for the most part, I thought as a Main Street real estate investor, I was 100% insulated. I couldn't have been more wrong because it really does matter, because the value of the dollar, in other words, the purchasing power of the dollar, and usually you refer to that as inflation, right? If inflation is there, the dollar is losing its purchasing power. And so the higher the inflation rate, the faster you're losing that purchasing power. And you might say, well, maybe that matters to me. Maybe it does. But the people who make the money available to the mortgage community, right, to the real estate community to borrow, that comes out of the bond market. And so when people go to buy a bond, which is an IOU, they're going to get paid back in the currency that they lent in this case, dollars. And if they know if they're making a long-term investment in a long-term bond and they're going to get paid back in dollars, they're going to be worth a whole lot less when they get them back. One of the things they're going to want is compensation for that time risk. And that's called higher interest rates. Okay. So now if you're a Main Street investor and higher interest rates impact you, now you understand why you want to pay attention. Okay. So let's just start with that. And so once you understand that the currency is a derivative of money, and money used to be, you mentioned the Coinage Act, Keith, money, which is gold, used to be synonymous with the dollar. The dollar was only a unit of measure of gold, 1/20th of an ounce. It was a unit of measure. So it's like the way I teach people is like if you had a gallon of milk and you traded, I'm a farmer and I had a lot of milk. And so everybody decided they were going to use gallons of milk as their currency. Hey, but there's a lot of gallons of milk. He's got a big refrigerator. We'll just trade gallons of milk. Hey, Keith, I really like your beef. Will you sell me a side of beef and I'll give you, 100 gallons of milk. And you're like, oh, that's great. Well, I can't drink all this milk. So I'm going to leave the milk on deposit at the dairy. And then later on, when I decide I want a suit of clothes, I'll say, well, that's 10 gallons of milk. So I'll give the guy 10 gallons of milk. So I just give him a coupon, a claim, a piece of paper for that gallon of milk or 20 gallons of milk, and he can go to the dairy and pick it up, right? And so that's kind of the way the monetary system evolved, except it wasn't milk, it was gold. So now you got the dollar. Well, after a while, nobody's going to get the milk. They don't care about the milk. And so now, instead of just saying, I'll give you a gallon of milk, you just say, well, I'll give you a gallon. And somebody says, okay, that's great. I'll take a gallon. They never open the jug up. They never realize the jug is empty. They're just trading these empty jugs that used to have milk in them. Well, that's what the paper dollar is today. It went from being a gold certificate payable to bearer on demand, a certain amount of gold, a $20 gold certificate, which looks exactly like a $20 Federal Reserve note today. They look exactly the same, except one says Federal Reserve note, which is an IOU backed by nothing. And the other one said gold certificate, which was payable to bearer on demand, real money. So my point is you got money, which is a derivative of the productivity, the beef, the suit, the milk, whatever, right? That's the real capital. The real capital is the goods and services we all want. Money is where we store the value of whatever it is we created until we want to trade it for something somebody else created later. And it used to be money and currency were one and the same, but now we've separated that. So now all we do is trade empty gallons, which are empty pieces of paper, and that's currency. So those are derivatives. And the last derivative of that chain is credit. And you had Richard Duncan on your show more than once, and he's famous for kind of having this term. We don't normally have capitalism, we have creditism.
Right.
Everything is credit. Everything is claims on wealth, but it's not real wealth. And it's just when we look at what's going on with our current administration and the drive to become a productive rather than a financialized society again, that's part of this uncertainty that everybody has, because this is not just a subtle little adjustment on the same course. This is like, no, we're going down a completely different path. But fundamentally, your system operates on this currency that is flowing through it, like the blood flowing through your body. And if the blood is bad, your body's sick. And right now, our currency is bad. And so it creates problems, not just for us, but all around the world. And now we're exacerbating that. And I'm not saying it's bad. In fact, I think it's actually good. But change is what it is, right? I mean, it can be really good to go to the gym and work out. Before we started recording, you talked about your commitment to fitness, and that if you stop working out, you get unfit and it's hard to start up again. Well, we've allowed our economy to get very unfit. Now we're trying to get fit again, and it's going to be painful. We're going to be sore. But if we stick with it, I think we can actually kind of save this thing. So I don't know what that's going to mean for the dollar ultimately, or if we end up going to something else. But right now, to your point, the dollar is definitely the big dog still, but I think it's probably even more under attack today than it's ever been. And so it's just something I think every Main Street investor needs to pay attention to.
And it was really that 1913 creation of the Fed, where the Fed's mandates really didn't begin to take effect until 1914, that accelerated this slide in the dollar. Prior to that, it was really just periods of war, like, for example, the Civil War, where we had inflation rise, but then after wars abated, the dollar's strength returned. But that ceased to happen last century.
I think there's a much bigger story there. So when we founded the country, we established legal money in the Coinage Act of 1792. We got gold and silver, and a specific unit of measure of gold and a specific unit of measure of silver was $1. And that's what money was constitutionally. Alexander Hamilton advocated for the first central bank and got it, but it was issued by charter, which meant that it was operated by the permission of the Congress. It wasn't institutionalized. It wasn't embedded in the Constitution. It was just something that was granted, like a license. You have a charter to be able to run a bank. When that initial charter came up for renewal, Congress goes, no, we're not going to renew it. Well, of course, that made the bankers really upset, because bankers have a pretty good gig, right? They get to just loan people money. They don't have to do any real work. And then they make money on just kind of arbitraging, other people's money. Savers put their money in and they borrow the money out, and then with fractional reserve, they're able to magnify that. So it's kind of a cool gig. And so what happened then, you had the first central bank. So then they got the second central bank. And the second central bank was also issued by charter. This time when it came up for renewal, Congress goes, yeah, let's renew it, right? Because the bankers knew we got to go buy a few congressmen if we want to keep this thing going. But President Andrew Jackson said, no, not going to happen. And it was a big battle. It's a famous quote of him just calling these bankers a brood of vipers, and I'm going to put you down, and God help me, I will, right? I mean, it was like intense. In fact, I do believe he got shot at one point. I think he died from lead poisoning because they never got the bullet out. So, when you go up against the bankers, it's not pretty. But he succeeded. He was the last president that paid off all the debt balanced the budget, paid off all the debt, and we got kind of back on sound money. Well, then a little while later, said, okay, we're going to need like something major. And again, I should put on, this is my hat right now. Kind of put it on. This is my tinfoil hat. Okay. And so I put this on when I kind of go down the rabbit trail a little bit. No, I'm not saying this is what happened, but it wouldn't surprise me, right? Because I know that war is profitable. And so sometimes, your comment was, hey, there's the bank. And then there was, the war, or there's the war, then there's the bank. Which comes first, the chicken or the egg? I think there's an article where Henry Ford and Thomas Edison went to Congress. I think it was December. The article was published New York Tribune, December 4th, I think, 1921. You can look it up, New York Tribune, front page article.
And for those of you in the audio only, Russ started donning a tinfoil-looking hat here about 1 minute ago.
I did, yeah. So I put it on just so fair warning, I may go a little conspiratorial, but the reason I do that is I think we've seen enough just in current modern history and politics in the age of AI and software and freedom of speech and new media. There's a lot of weird stuff going on out there, but a lot of stuff that we thought was really weird a little while ago has turned out to be more true than we thought. When you look back in history and you kind of read the official narrative and you kind of read between the lines, you think, oh, maybe some stuff went on here. So anyway, the allegation that Ford made, smart guy, Thomas Edison, smart guy, and they go to Congress and they go, hey, we need to get the gold out of the bankers' hands because gold is money. And we need money not to revolve around gold because the bankers control gold. They control the money and they make profits, his words, not mine, by starting wars. Because he was very upset about World War I, which happened. We got involved right after Fed gets formed in 1913. World War I starts in 1914. The United States sits off in the background and sells everybody everything and collects a bunch of gold and then enters at the end and ends it all. And that big influx created the Roaring Twenties, as we all know, which ended big boom to big bust, and that cycle, which then a crisis that created potentially a argument for why the government should have more control, right? So you kind of go down this path. So we ended up in 1865 with President Lincoln suppressing states' rights and eventually creating an unconstitutional income tax and then creating an unconstitutional currency. That's what Abraham Lincoln did. And then on the back end of that, it didn't end well for him. And I don't know why, but all I know is that we had a financial crisis in 1907. And the solution to that was the Aldrich Plan, which was basically a monopoly on money. It's called a money trust. And Charles Lindbergh Sr. was railing against it, as were many people at the time, going, no, this is terrible. So they renamed the Aldrich Plan the Federal Reserve Act. And instead of going for a bank charter, they went for a constitutional amendment. And they got it in the 16th Amendment. And that's where we got the IRS. That's where we got the income tax, which was only supposed to be 7%, only affect like the top 1 or 2% of earners.
Right.
And that's where we got, the Federal Reserve. That's where all that was born. Since that happened, to your point, the dollar has been on with a slight little rise up in the 20s, which, there's a whole thing about whether that caused the crash or not. But at the end of the day, if you go look at St. Louis Fed, which you go look at all the time, and you just look at the long-term trend of the dollar, it's terrible. And the barometer, that's gold, right? $20 of gold in 1913 and 1933, and then 42 in 1971 or 2, whatever it was, 3, and then eventually as high as 850. But at the turn of the century, this century, it was $250. So at $2,500, it would have lost 90%. In the 21st century, the dollar's lost 90% in the 21st century just to 2,500.
That's profound.
So to go, yeah, that's right. And it had already lost more than 90% from $20 to $250. So it lost 90% and then 90% of the 10% that was left. And that's where we're at. We're worse than that today. No currency, as far as I understand, I've been told this, haven't done the homework, but it's my understanding, no currency in the history of the world has ever survived that kind of debasement. So I think a lot of people who are watching are like, okay, it's not a matter of if, it's a matter of when. And then the big question is when that when comes, what does a transition look like? What rises in its place? And then you look at things like a central bank digital currency, which is not like Bitcoin. It's not a crypto. It's a centrally controlled currency run by the central bank. If we get that, I would argue that's not good for privacy and security. Could be Bitcoin, would be better, I would argue. Could go back to gold backing, which I would say is better than what we have, or we could get something nobody's even thought of. I don't know. We don't know. But I do think we're at the end of the life cycle, historically, all things being equal. And I think all the indication with the big run up of gold is screaming something's broken. It's just screaming it right now. Not just because the price is up, but who's buying it? It's the central banks.
Central banks are doing most of the buying, right? It's not individual investors going to a coin shop. So that's really screaming, telling you that people are concerned. People are losing their faith in giving loans to the United States, for sure. And Russ, as we talk about gold and its important link to the dollar over time, you mentioned how they wanted it to get it out of the bank's hands for a while. Of course, there was also a period of time where it was illegal for Americans to own gold. And then we had this Bretton Woods Agreement, which was really important as well, where we ended up violating promises that had to do with gold again. So can you speak to us some more about that? Because a lot of people just don't understand what happened at Bretton Woods.
What happened is we had the big crash in 1929, and the net result of that was in 1933, we got Executive Order 6102. In fact, I have a picture of it framed. And that was in the wake of that in 1933. And so what Franklin Delano Roosevelt did in signing that document, which was empowered by a previous act of Congress, basically let him confiscate all the money. It'd be like if right now, President Trump signed an executive order and said you have to take all your cash, all the cash that you have out of your wallet, and you have to send it all, take it into the bank, and they're going to give you a Chuck E. Cheese token, right? And if you don't do it, it's a $500,000 fine and 10 years in prison, right? Back then, it was a $10,000 fine, which was twice the price of the average home. Huge fine, plus jail time. That's how severe it was, okay? So they confiscated all the money. That happened in 33. Okay, now we go off to war, and we enter the war late again. And so we have the big manufacturing operation. We're selling munitions and all kinds of supplies to everybody all over the world, right? And we're just raking the gold in, 20,000 tons of gold. We got all the gold. We got the biggest army. Now we got the biggest bomb. We got the biggest economy. We got the strongest balance sheet. Well, I mean, we went into debt for the war, but I mean, we had a lot of gold. So now everybody else is decimated. We're the big dog. Everybody knows we're the big dog. The United States shows up in New Hampshire, Bretton Woods, and they have this big meeting with the world. And they say, hey, guys, new sheriff in town. Britain used to be the world's reserve currency, but today we're going to be the world's reserve currency. And so this was the new setup. But it's okay. It's okay because our dollar is as good as gold. It's backed by gold. And so anytime you want, foreign nations, you can just bring your dollars to us and we'll give you the gold. No problem. And everyone's like, okay, great. What are you going to say, right? You got the big bomb, you got the big army, everybody needs you for everything to live. Like, you're not going to say no. So they said yes. Of course, the United States immediately. I've got a speech that a guy named Beardsley Rummel did. Have you ever heard me talk about this before, Keith?
No, I've never heard about this.
So Beardsley Rummel was the New York Fed chair when all this was happening. And so he gave a speech to the American Bar Association in 1945, and I got a transcript of it, a PDF transcript of it that was from 1946. And basically he goes, look, income taxes are obsolete. We don't need income tax anymore because we can print money because we're off the gold standard and we have no accountability. He just admitted it, just totally admitted it, and said the only reason we have income tax is to manipulate behavior, is to redistribute wealth, is to force people to do what we want them to do, punish things and reward others, right? Just said it, plain language. I have a transcript of the speech. You can get a copy of it. You send an email to Rummel, RUML, at mainstreetcapitalist.com. I'll get it to you. So it's really, really interesting. So he admitted it. So we went along in the 40s and the 50s, and, we had the only big manufacturing, because everybody else is still recovering from the war. Everything been bombed to smithereens. And we're spending money and doing all kinds of stuff and having the 50s. And it was great, right? Right up until the mid 60s. So the mid 60s, it's like, okay, we got a problem. And Charles de Gaulle, who was the president of France at the time, went to a meeting, and there's a YouTube video of it. You can see it. And he basically told the world, hey, I don't think the United States is doing a good job managing this world's reserve currency. I don't think they've got the gold. I think they printed too much money. I think that we should start to go redeem our dollars and get the gold.
That was pretty forward thinking.
And he created a run on the bank. And at the same time, we passed the Coinage Act in 1965 and took all the silver out of the people's money. So we took the gold in 33, and then we took the silver in 65. right? Because we got Vietnam and the Great Society, welfare, all these things were going on in the 60s, and we're just going broke. Meanwhile, our gold supply went from 20,000 tons down to 8. And Richard Nixon is like, whoa, time out. Like, this is bad. And so we had inflation in 1970, August 15th, 1970, 1 year before August 15th, 1971. 1970, Nixon writes an executive order and freezes all prices and all wages. It became illegal by presidential edict for a private business to give their employee a raise or to raise their prices to the customers.
That's almost incomprehensible that could happen. Price and wage
United
control.
States of America.
Right.
And inflation was 4.4%, and it was a national emergency. Like today, I mean, a few years ago, like 3 or 4 years ago, if we could get it down 4.4%, it'd be a holiday. It'd be like a celebration. That was bad. And so that's what happened. And so a year later, that didn't work. It was a 90-day thing. It was a disaster. And so a year later, August 15th, 1971, Nixon came on live TV after Gunsmoke, I think it was. And I was old enough. I'm watching TV on a Sunday night. I watched it. Wow. So it live. That's how old I am. So it's a lot of this history, not the Bretton Woods stuff, but from like 1962, 3, 4 forward. I remember I was there.
Yeah. That's remarkable that you remember the whole Nixon address on television. We should say it for the listener that doesn't know. Basically, the announcement Nixon made, he said was a temporary measure, is that foreign nations can no longer redeem their dollars for gold. He broke the promise that was made at Bretton Woods in about 1945.
Yeah. And then gold went from $42 up to $850. And a whole series of events that have led to where we're at today were put in place to cover up the fact that the dollar was failing. We had climate emergency. We were headed towards the next global ice age. We had an existential threat in 2 different diseases that hit, one right after the other. First one was the H1N1 flu, swine flu, and then the next thing was AIDS. And so we had existential pandemic, 2 of them. We also had a oil shortage crisis. We were going to run out of fossil fuel by the year 2000. We had to do all kinds of very public, visible, visceral things that we would all see. You could only buy gas odd, even days. Like if your license plate ended in an odd number, you could go on these days. And if it ended on an even number, you could go on the other days. And so we had that. We lowered our national speed limit down to 55 miles an hour. We created the EPA and all these different agencies under Jimmy Carter to try to regulate and manage all of this crisis. Prior to that, Nixon sent Kissinger over to China, and we opened up trade relations. And we'd been in Vietnam to protect the world from communism because it was so horrible. And then in the wake of that, we go over to communist China, Chairman Mao, and open up trade relations. Why? We needed access to their cheap labor to suck up all the inflation. And we went over to the Saudis and we cut the petrodollar deal. Why? Because we needed the float. We needed some place for all these excess dollars that we had created to get sucked up. And so they got sucked up in trading the largest commodity in the world, energy. And the deal was, hey, Saudis, here's the deal. You like your kingdom? Well, we got the big bomb. We got the big army. You're going to rule the roost in the Middle East, and we'll protect you. All you got to do is make sure you sell all your oil in dollars and dollars only. And they're like, well, what if we're selling oil to China? Or what if we're selling oil to Japan? Can they pay in yen? Nope. They got to sell yen, buy dollars. Well, what do we do with all these dollars? Buy our treasuries. Okay, so
what is it? I got
this. Yeah. And so that was the petrodollar system. And the world looked at everything that went on, and the world is like, the United States, coming back to Europe and Charles de Gaulle, they're like, the United States is not handling this whole dollar thing real well. We need an alternative. What if all of us independent nations in Europe got together and created a common currency? We don't want to be like one country like the United States, but we want to be like an economic union. So let's create a currency. Let's call it the euro. And they started that process in the 70s, but they didn't get it done until 99. And so they get it done in 99. As soon as they get it done, this guy named Saddam Hussein goes, hey, I'm now the big dog here. I got the 4th largest army in the world. I'm here in a big oil producing nation. Let's trade in the euro. Let's get off the dollar. Let's do oil in the euro. And he's gone. I mean, I should put my hat back on. I'm not sure. But somehow we went into Afghanistan and took a hard left and took this guy out.
Some credence to this. Yes.
Yeah. So, but with that said, we ended up with the euro taking about 20% of the global trade market from the United States, which is about where it sits today. And the United States used to be up over 80%, and now we're down below 60%. Still the big dog by triple. And the euro is not in a position to supplant the US. But I think China, whose claim to fame is looking at other people's technology and models and copying it, looked at what the United States did to become the dominant economic force. And I think they've systematically been copying it. I wrote a report on this way back in 2013 when I started really paying attention to it and began to chronicle all the things that they were doing, this big de-dollarization movement that I think still has legs. It's the BRICS movement. It's all the central banks buying gold. It's the bilateral trade agreements where people are doing business outside the dollar. There's been, and not just that, but also putting together the infrastructure, right? The Asian Infrastructure Bank is an alternative to the IMF. Have you read Confessions of an Economic Hitman?
No.
Okay. So this is a guy that used to work in the government, I think CIA or something, and he would go down and he'd cut deals with leaders of countries to get them to borrow from the United States to put in key infrastructure so they could trade with the U.S. And then, of course, if they defaulted, then the U.S. owned that in the infrastructure. You can look it up. His name is Perkins, right? Look it up, Confessions of Economic Hitman. But you see China doing the same thing. China's got their Belt and Road Initiative, and you go through, and if you want to trade with China on that route, you're going to have infrastructure. You're going to need ports. You're going to need terminals for distribution. But you don't have the money. We'll loan it to you, and we'll loan it to you in yuan. Now we're creating demand for yuan. And we also are enslaving, borrower servant to the lender. We're beginning to enslave these other nations under the guise of helping them by financing their growth so they can do business with us. It's the same thing the United States did. And Shanghai Gold Exchange as opposed to the London Bullion Exchange. So all of the key pieces of infrastructure that were put in place to facilitate Western hegemony in the financial markets, the Chinese have been systematically putting in place with BRICS. And so there's a reason we're in this big trade war right now. We recognize that they had started to get in a position where they were actually a real threat, and we got to cut their legs out from underneath them before they get any stronger. Again, I should put my hat back on. Nobody's calling me up and telling me. I'm just reading between the lines.
Sure. There certainly are more competitors to the dollar now. And can you imagine what rate of inflation that we would have had if we had not outsourced our labor and productivity over to a low-wage place like China in the East? Russ and I have been talking about the long-term debasement of the dollar and why. More on that when we come back, including what Russ is up to today. You're listening to Get Rich Education. Our guest is Russell Gray. I'm your host, Keith Weinhold. The same place where I get my own mortgage loans is where you can get yours, Ridge Lending Group, NMLS 42056. They provided our listeners with more loans than anyone because they specialize in income properties. They help you build a long-term plan for growing your real estate empire with leverage. Start your pre-qual and even chat with President Chaley Ridge personally. While it's on your mind, start at ridgelendinggroup.com. That's ridgelendinggroup.com. You know what's crazy? Your bank is getting rich off of you. The average savings account pays less than 1%. It's like laughable. Meanwhile, if your money isn't making at least 4%, you're losing to inflation. That's why I started putting my own money into the FFI Liquidity Fund. It's super simple. Your cash can pull in up to 8% returns and it compounds. It's not some high-risk gamble like digital or AI stock trading. It's pretty low risk because they've got a 10-plus year track record of paying investors on time, in full, every time. I mean, I wouldn't be talking about it if I wasn't invested myself. You can invest as little as $25K, and you keep earning until you decide you want your money back. No weird lockups or anything like that. So if you're like me and tired of your liquid funds just sitting there doing nothing, check it out. Text FAMILY to 66866 to learn about Freedom Family Investments Liquidity Fund. Again, text FAMILY to 66866.
Hi, this is Rich Dad Advisor Garrett Sutton. You're listening to the always valuable Get Rich Education with Keith Weinhold. Don't quit your daydream.
Welcome back to Get Rich Education. We're talking with the Main Street capitalists, Russell Gray, about this long-term debasement of the dollar. It's inevitable. It's one of the things we actually can forecast with pretty good predictability that the dollar will continue to debase. It's one of the few almost guarantees that we have in investing, so we can think about how we want to play that. Russell, one thing I wonder about is, did we have to completely depeg the dollar from gold? Couldn't we have just diluted it where we could instead say, well, hey, now instead of just completely depegging the dollar from gold, we could say, well, now it takes 10 times as many dollars as it used to redeem it for an ounce of gold. Did it make it more powerful that we just completely depegged it 100%?
It would disempower the monopoly. Right. In other words, I think that the thing from the very beginning was scripted to disconnect from the accountability of gold, which is what sound money advocates want. They want some form of independent accountability. Gold is like an audit to a financial system. If you're the bankers and you're running the program, the last thing in the world you want is a gold standard because it limits your ability to print money out of thin air and profit from that. So I don't think the people who are behind all of this are in no way, shape, or form interested in doing anything that's going to limit their power or hold them accountable. They want just the opposite. I think if they could wave a magic wand and pick their solution to the problem, it would be central bank digital currency, which would give them ultimate control.
Yeah.
And it wouldn't surprise me if we perhaps were on a path where some crises were going to converge, whether it's opportunistic, meaning that the crisis happened on its own, and quote Rahm Emanuel and whoever he was quoting, never let a good crisis go to waste. And you're just opportunistic, or, put the conspiracy theory hat on, and maybe these crises get created in order to facilitate the power grab. I don't know. It really doesn't matter what the motives are or how it happens. At the end of the day, it's what happens. It happened in 33. It happened in 60, in 71. It's what happens. And so it's been a systematic depegging of any form of accountability. I mean, we used to have a budget ceiling we used to talk about. Now it's just like it's routine. You blow right through it. Right. There's you balance. I mean, when's the last time you even had a budget, much less anything that looked like a balanced budget amendment. So I think there's just no accountability other than the voting booth. And, I think maybe you could make the argument that whether you like Trump or not, the public's apparent embrace of him show you that the Main Street, and I have a lot of faith in Main Street. I think Main Street is like, you know what, this is broken. I don't know how to fix it, but somebody just needs to go in and just tear this thing down and figure out a new plan. Because I think anybody paying attention knows that this perpetual debasement, which is kind of the theme of the show, it creates haves and have-nots. Guys like you who understand how to use real estate to short the dollar, especially when you marry it to gold, which is one of my favorite strategies, to double short the dollar, can really magnify the power of inflation to pull more wealth onto your balance sheet. Problem is the people who aren't on that side of the coin are on the other side of the coin, and so the poor get poorer and the rich get richer. Well, the first order of business in a system we can't control is to help as many people be on the rich get richer. That's why we have the Get Rich show, right? Let's help other people get rich. Because if I'm the only rich guy in the room, all the guns are pointed at me, right? So I wanted everybody as rich as possible. I think Trump and Kiyosaki wrote about that in their book, Why We Want You to Be Rich, right? When everybody's prospering, it's better, it's safer. You have people to trade with and whatnot. But we have eviscerated the middle class because industry has had to go access cheap labor markets in order to compensate for this inflation. And, you talk about the Fed mandate, which is 2% inflation. Price inflation, 2%. So if you say something that costs $1 today, a year from now is going to cost $1 you think, well, maybe that's not that bad. But here's the problem. The natural progression of business and technology is to lower the cost.
Right.
So if you have something that costs $1 today, and because somebody's using AI and internet and automation and robots and all this technology, right? And the cost, they could really sell it for 80 cents. And so the Fed looks at it and goes, well, let's inflate to $1.02. That's not 2 cents of inflation. That's 22 cents of inflation. And so there's hidden inflation. The benefits of the gains in productivity don't show up in the CPI, but it's like deferred maintenance on an apartment building. You can make your cash flow look great if you're not setting anything aside for the inevitable day when that roof is going to go out and that parking lot's going to need to be repaved, right? And you don't know how far out you are until you get there and you're like, wow, I'm really short. And I think that we have been experiencing for decades the theft of the benefit of our productivity gains. And we're not just a little bit out of position, we're way out of position.
That's a great point. Like I had said earlier, imagine what the rate of inflation would be if we hadn't outsourced so much of our labor and productivity to low-cost China. And then imagine what the rate of inflation would be as well if you would factor in all of this increased productivity and efficiency, the natural tendencies of which are to make prices go lower as society gets more productive, but instead they've gone higher. So when you adjust for some of these factors, you just can't imagine what the true debased purchasing power of the dollar is. It's been happening for a long time. It's inevitable that it's going to continue to happen in the future. So this has been a great chat about the history and us understanding what the powers that be have done to debase our dollar. It's only at what rate we don't know. Russ, tell us more about what you're doing today. You're really out there more as a champion for Main Street and capitalism.
20 years with Robert and the real estate guys, and it was fantastic.
Yep.
I loved it. I went through a lot, obviously, in 2008, and that changed me a little bit. Took me from kind of being a blocking and tackling, here's how you do real estate, into really understanding macro and going, it doesn't matter. You can do like I did, and you build this big collection of properties and you lose it all in a moment because you don't understand macro. So I said, okay, I want to champion that cause. And so we did that. And then we saw in the 2012 Jobs Act, the opportunity for capital raisers to go mainstream and advertise for accredited investors. And I wrote a report then called New Law Breaks Wall Street Monopoly. And I felt like that was going to be a huge opportunity. And we pioneered that. But then after my late wife died and I had a chance to spend some time alone during COVID, and I thought, life is short. What do I really want to accomplish before I go? And then I began looking at what was going on in the world. I see now a couple of things that are both opportunities and challenges or causes to be championed. And one is the mega trend that I believe the world is going, some people call it a fourth turning, whatever. I don't consider that we have to fall off a cliff as destiny type of thing to be like cast in stone. But what I do see is that people are sick and tired of monopolies. We're sick and tired of big tech. We're sick and tired of big media. We're sick and tired of big government. We're sick and tired of big corporations. We don't want it. And big banks, right? So you got the rise of Bitcoin. You got people trying to get out from underneath the Western hegemony, as we've been talking about. Decentralization of everything. Our country was founded on the concept of decentralization. And so people don't understand that, right? It used to be everything was centralized, all power was in the king. Real estate meant royal property. That's what real estate, it's not like real asset, like tangible. It's royal estate. It's royal property. Everything belonged to the king, and you just got to work it like a serf, and then you got to keep 75% of your produce, and you sent 25% through all the landlords, the land barons, and all the people in the hierarchy that fed on running things for the king, but you didn't own anything. Our founder turned that upside down and said, no. It's not the king that's sovereign. It's the individual. The individual is sovereign. It isn't the monarchy. It's the individual states. And so we're going to bring the government small. The central government small has only got a couple of obligations, like protect the borders, facilitate interstate commerce, and let's just have one common currency so that we can do business together. Other than that, like the state's just going to run the show. Of course, Lincoln kind of blew that up, and it's gotten a lot worse after FDR. So I feel like we're under this big decentralization movement, and I think Main Street capitalism is the manifestation of that. If you want to decentralize capitalism, the gig economy, if you want to be a guy like you, and you can run your whole business off your laptop with a microphone and a camera, in today's day and age with technology, people have tasted the freedom of decentralization. So I think the rise of the entrepreneur, I think the ability to go build a real asset portfolio and get out of the casinos of Wall Street. I think right now, if we are successful in bringing back these huge amounts of investment, Trump's already announced like $2.5 or $3 trillion of investment. People are complaining, oh, the world is selling US. Well, they're selling stocks and but they're putting the money actually into creating businesses here in the United States. That's going to create that primary driver, as you well know in real estate, that's going to create the secondary and tertiary businesses and the properties they're going to use. All kinds of Main Street opportunity are going to grow around that. I lived in Silicon Valley. When a company would get funded, it wasn't just a company that prospered, it was everything around that company.
Right.
All these companies, I remember when Apple started. I remember when Hewlett-Packard, it was big, but it got a lot bigger, right? I watched all that happen in Silicon Valley. I think that's going to happen again. I think we're at the front end of that. And so that's a super exciting wave. The second thing that is super important is this Raising Capitalist project. And the reason I'm doing it is because if we don't train our next generation in the principles of capitalism and the freedom how it decentralizes their personal economy, and they get excited about Bitcoin, but that's not productive. And I'm not putting it down. I'm just saying it's not productive. You have to be productive. You want to have a decentralized currency? Yes. You want to have decentralized productivity? That's Main Street capitalism. If kids who never get a chance to be in the productive economy get to vote at 18, 19, 20, 21, 22 before they've ever earned a paycheck, before they have any idea, never run a business, if somebody tells them, hey, those guys that have all that money and property, they cheated. It's not fair. We need to take from them. We need to limit them. Not thinking, oh, well, if I do that, when I get to be there, what I'm voting for is going to get on me. Right now, Keith, there are kids in 9th grade who are going to vote for your next president.
Right. And they think capitalism is evil. This is part of what you're doing with the Raising Capitalists project, helping younger people think differently. Russ, I have one last thing to ask you. This has to do with the capitalism that you're championing on your platforms now and real estate. I continue to see, sometimes I get comments on my YouTube channel, especially maybe it's more and more people increasingly saying, hey, I think housing should be a human right. So talk to us about that. And maybe it's interesting, Russ, if I take the other side of it and play devil's advocate. People who think housing is a human right, they say something like the idea is that housing, it's a fundamental need, just like food and clean water and healthcare are. Without stable housing, it's incredibly hard for a person to access opportunities like work and education or healthcare or participate meaningfully in society at all. So government ought to provide housing for everybody. What are your thoughts there?
Well, it's inherently inflationary, which is the root cause of the entire problem. So anytime you create consumption without production, you're going to have more consumers than producers. And so you're going to have more competition for those goods. The net truth of what happens in that scenario are shortages everywhere. Every civilization that's ever tried any form of system where people just get things for free because they need them end up with shortages and poverty. It doesn't lift everybody. It ruins everything. I mean, that's not conjecture. That's history. So that's just the way it works. And if you just were to land somebody on a desert island and you had an economy of one, they're going to learn really quick the basic principles of capitalism, which is production always precedes consumption, always, 100% of the time, right? If you're there on that desert island and you don't hunt, fish, or gather, you don't eat, right? You don't get it because, it's a human right to have food. Nope. It's a human right to have the right to go get food. Otherwise, you're incarcerated. You have to have the freedom of movement to go do something to provide for yourself. But you cannot allow people to consume without production. So everybody has to produce. And, if you go back to the Plymouth Rock experiment, if you're familiar with that at all.
Yeah.
Yeah. So, just for anybody who doesn't know, when the Pilgrims came over here in the 1600s, William Bradford was governor and they tried it. They said, hey, we're here. Let's stick together, all for one and one for all. Here's the land. Everybody get up every day and work. Everybody works and everybody eats. They starved. And so he goes, okay, guys, new plan. All right. You, Weinholds, see this little plot of land? That's yours. You work it. You can eat whatever you produce. Over there, you, Grays, you're going to do yours. And Johnson's, you're going to do yours, right? Well, what happened is now everybody got up and worked. And they created more than enough for their own family. And they had an abundance. And the abundance was created out of their hunger. When they went to serve their own needs, they created abundance for others. That's the premise of capitalism. It's not the perfect system. There is no perfect system.
Right.
We live in a world where human beings have to work before they get to eat. When I say eat, it could be having a roof over their head. It could be having clothes. It could be going on vacation. It could be having a nice car. It could be getting health care. It doesn't matter what it is. Whatever it is you need, you have the right or should have the right in a free system to go earn that by being productive. But the minute somebody comes and says, oh, you worked and I'm going to take what you produced and give it to somebody else who didn't, that's patently unfair. But economically, it's disastrous because it incentivizes people not to work, which creates less production, more consumption. I have another analogy with sandwich makers. You can imagine if you got a group of people making sandwiches, one guy starts creating coupons for sandwiches. Well, then if somebody says, okay, well, now we got 19 people providing for 20, that's okay. But then all the guys making sandwiches go, why making sandwiches? I'm going to get the coupon business. Pretty soon you got 18 guys doing coupons, only 2 making sandwiches, not enough sandwiches to go around. All the sandwiches cost tons of coupons because we got way more financialization than productivity, right? That's the American economy. We have to fix that. We can't have people making money by just trading on other people's productivity. We have to have people actually being productive. This is what I believe the administration is trying to do: rebuild the middle class, rebuild that manufacturing base, make us a truly productive economy. And then you don't have to worry about these things, right? We're going to create abundance. And if you don't have the inflation, which is coming from printing money out of thin air and giving to people who don't produce, then housing all of a sudden becomes affordable. It's not a problem. Healthcare becomes affordable. Everything becomes affordable because you create abundance, because everybody's producing. The system is fundamentally broken. Now, we have to learn how to profit in it in its current state, which is what you teach people how to do. We also have to realize that it's not sustainable. We're on an unsustainable path, and we're probably nearing that event horizon, the path of no return, where the system is going to break. And the question is how are you going to be prepared for it when it happens? Number 2, are you going to be wise enough to advocate when you get a chance to cast a vote or make your voice heard for something that's actually going to create prosperity and freedom versus something that's going to create scarcity and oppression? And that's the fundamental thing that we have to master as a society. We got to get to our youth because they're the biggest demographic that can blow the thing up. And they're the ones that have been being indoctrinated the worst.
Yes. Fed Chair Jerome Powell himself said that we live in an economic system today that is unsustainable. Yes, the collectivism we touched on quickly descends into the tyranny of the majority. And in my experience, historically, the success of public housing projects has been poor to mixed at best. Residents often don't respect the property when they don't have an equity stake in it or even a security deposit tied up in it. And blight and high crime rates have often followed with these public housing projects when you go down that path of making housing as a human right. Like you said earlier, you have a right to go procure housing for yourself, just not to ask others to pay for it for you. Well, Russ, this has been great. It's good to have your voice back on the show here again, here on A Real Estate Show. If people want to connect with you, continue to see what you've been up to and the good projects that you're working on, promoting the virtues of capitalism, what's the best way for them to do that?
I think just send an email to follow at Russell Gray, RussellGray.com. Let you know where I am on social media. I'll let you know when I put out new content. I'll let you know when I'm a guest on somebody's show. And I'm on the cusp of getting my own show finally launched. I've been doing a lot of planning to get that out, but I'm excited about it because I do think, like I said, the time is now, and I think the marketplace is ripe. And I do speak Main Street and macro, and I hope I can add a nuance to the conversation that will add value to people.
Russ, it's been valuable as always. Thanks so much for coming back onto the show.
Thanks, Keith.
Yeah, terrific historic outline from Russ about the long-term decline of the dollar. It's really a fresh reminder and motivator to keep being that savvy borrower. Of course, real estate investors have access to borrow giant sums of dollars and short the currency that lay people do not. In fact, lay people don't even understand that it's a viable strategy at all. Like he touched on, Russ has really been bringing an awareness about how decentralization is such a powerful force that reshapes society. In fact, he was talking about that the last time that I saw him in person a few months ago. Notably, he touched on Nixon-era wage and price controls. Don't you find it interesting, fascinating really, how a few weeks ago, Trump told Walmart not to pass tariff-induced price increases onto their customers? Well, that's a form of price control that we're seeing today. To our point, when we had the father of Reaganomics, David Stockman, here on the show 5 weeks ago, Tariffs are already government intervention into the free market, and then a president telling private companies how to set their prices. That is really strong government overreach. I mean, I can't believe that more people aren't talking about this. Maybe that's just because this cycle started with Walmart, and that just doesn't happen to be a company that people feel sorry for. Hey, well, I look forward to meeting you in person in Miami in just 4 days, as I'll be a faculty member for when we kick off the terrific Real Estate Guys Investor Summit at Sea, and really getting to know you, because we're going to spend 9 days together teaching, learning, and having a great time on a cruise ship in the Caribbean. Until then, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
You know, whenever you want the best written real estate and finance info, oh, geez, today's experience limits your free articles access, and it's got paywalls and pop-ups and push notifications and cookies disclaimers. It's not so great. So then it's vital to place nice, clean, free content into your hands that adds no hype value to your life. That's why this is the golden age of quality newsletters, and I write every word of ours myself. It's got a dash of humor, and it's to the point because even the word abbreviation is too long. My letter usually takes less than 3 minutes to read, and when you start the letter, you'll also get my 1-hour fast real estate video course. It's all completely free. It's called the Don't Quit Your Daydream letter. It wires your mind for wealth, and it couldn't be easier for you to get it right now. Just text GRE to 66866. While it's on your mind, take a moment to do it right now. Text GRE to 66866. The preceding program was brought to you by your home for wealth building, GetRichEducation.com.